Welcome back, guys, to the M1 Finance Portfolio Review. Hope you guys are doing very well today. Hope you guys are taking additional strides toward reaching financial freedom, reaching FIRE, and achieving your passive income goals. One of my goals here is to eliminate all need to work. Well, maybe not eliminate all need to work, but eliminate all need to work at a 9-to-5 job. Sometimes the stresses and the rewards aren't necessarily matching up. And wouldn't it be nice to just at some point, not be able or not be required to have to go to work and literally have all of your expenses paid through passive income? And this dividend portfolio here in M1 Finance is one of the key steps that will help make that a reality. So I named this one multiple streams of income. And the reason why is with my strategy, I'm implementing multiple streams of income, meaning the dividends, the passive income generated from this M1 Finance dividend portfolio will add to additional streams of income that I've created in order to essentially create a early retirement or perhaps a FIRE lifestyle for myself and for my family. And so here, this account is sitting at $34,423. And I know it's not the largest M1 Finance account. There's much bigger accounts out there. I mean, we could look at Joseph Carlson. He is actually one of the people, or is, in my opinion, the one earlier dividend income YouTuber that I followed in the beginning. He inspired me to even create this account. I actually used his affiliate link to open the account. So Joseph Carlson is really inspirational to me, and I just got to thank him for helping me to get this far. But anyway, this account is up $8,893. It's got a return of 44% at this time, and I've got a number of different slices in here: utilities, healthcare, telecom, real estate, consumer, industrials, oil and gas, tech, finance. Cool thing is I've got SCH, and SCH, I've gotten a lot of love for this particular allocation because out of all of the different dividend ETF, or out of all of the different dividend stocks that I have in this M1 Finance portfolio, SCH, which is the Schwab US Dividend Equity ETF, is one of two ETFs that pays a dividend that is not a dividend stock. So the other one is the SPHD, Invesco S&P 500 high dividend stock, or excuse me, high dividend ETF. All other holdings in my M1 Finance dividend portfolio are stocks, and they're actually doing pretty well. And one other thing that I wanted to share with you guys is we talked about this on previous videos. And like I said, I'm not one to call market bottoms, but this may have actually potentially been a fairly accurate call, at least so far anyway. The market is subject to change. Right now, the Dow Jones Industrial is sitting at 33,280 points. Yesterday we were up, or actually this morning we're up 506 points so far. And I called back probably maybe 5 or 6 weeks ago. I was observing that we were kind of bouncing around this 29,000 to 30,000 level on the Dow Jones, in spite of ever evolving negative news coming out. And it seemed like we weren't breaching that 29,000 mark. So I was just kind of paying attention to that level of support. And here we are, we're up what, 4,000 points from that low. And I'm still buying. And I just thought I would kind of just mention this, in spite of the fact that we're still expecting additional rate hikes coming from Jerome Powell, coming from the Fed going forward. We've already seen 75 back-to-back. We've already seen 2 75-point back-to-back rate hikes from the Fed, and we're expecting to see more. In fact, for the first time, we're actually starting to see some of the benefits of these rate hikes outside of the real estate sector. The real estate sector really is the only sector that we've actually seen any type of price action slowdown or price increase slowdown. So for the first time in who knows how long, we're actually seeing consumer prices rose 8.5% in July, which is actually less than expected as inflation measures ease a bit. So, we're starting to see, we're still seeing prices increase, but the rate of increase is starting to slow down. So that is definitely a step in the right direction. We've got a lot further to go, but it's certainly a step in the right direction. And I think that the stock market and many investors, whether institutional investors or regular investors like me and you, are starting to see this as a positive sign, perhaps. Now, there's something brewing over in China right now. And essentially, this is this massive China evergrande situation right now. There's a company called Evergrande over in China, and they've been doing this kind of like a prepaid real estate sale over in China, and it's seeming more and more so like a Ponzi scheme. It says here, in the wake of some of the most challenging economic conditions seen in decades, China's middle class is demonstrating a level of defiance that has arguably never been seen in the country's modern history. The outside world first became aware of the rumblings when China's Evergrande inability to meet its debt obligations, totaling well over $300 billion, began to make headlines in 2021. The scary part about this is we don't know quite how far this Evergrande collapse will affect the Chinese economy and also bleed out to affect other economies, potentially the United States here. This could potentially be as catastrophic as the 2008 housing market crash that we experienced here in the United States that affected other countries as well. Since China's largest or second largest property developer has been on a downward spiral, China's Evergrande, defaulting on its offshore bonds, selling off assets, and for the most part of 2022, its Hong Kong listed shares have been suspended pending a restructuring proposal while projects have stalled. So this is that whole property pre-sale business model that I've been telling you guys or discussing with you guys earlier in this video. It's not something that we really do here in the United States, but this is something that was pretty much done on a wide scale with Chinese property developer Evergrande. And what makes the unfolding property crisis in China so unique and damaging is how widespread the pre-sale model is in the country's residential property sector. Experts put the percentage of Chinese property developer revenue generated through pre-sales at close to 90%. So that is unbelievably leveraged and quite economically scary, in my opinion. In most cases, this means that the buyer pays a deposit and begins, get this, they're making mortgage payments before they can even live in the property. Can you imagine that? Most people here in the United States, they move into a property and the first mortgage payment's not due for anywhere between 30 and up to 60 days after they moved in. But over in China, thanks to the Evergrande property real estate developer, these homeowners, or I don't even know if you can call them homeowners if the home was not done being built yet. But anyway, these homeowners, they're being expected to pay mortgage payments before the house is even done being constructed. The Chinese have been so willing to do this over the past 2 decades, 20 years they've been doing this, because Chinese property prices have been rising so quickly and they don't want to risk having to pay more for it if they wait. So it's kind of like, for us, it seems silly. Like, why would you ever pay for a property before you could live in it? But the Chinese real estate market is so much different, is so much more aggressive. And this is also largely why so many more Chinese investors have been investing in real estate here in the United States, not only for passive income, to build their net worth here in the United States, but also because real estate is more accessible and easier to purchase here in the United States than it has historically been over in China. But in recent years, hundreds of thousands of borrowers have been seeing their apartments as developers But in recent years, hundreds of thousands of buyers have never seen their apartments as developers like China Evergrande have run up seemingly insurmountable debt just as the property market slowed. And this may have to do with the fact that they're over leveraged. They're 90% of their revenue for China Evergrande is coming from prepayments. So this is leverage at its finest. And we know what happens when you're over leveraged and there's a slowdown in the real estate market. We've already seen that on a, not to be, no pun intended, on a very grand scale back in 2008. Now, China's Evergrande incomplete apartment complex has become the catalyst for rare public demonstrations in China in 2021. Now, what's crazy is that this is a movement over there, and I'm afraid that this could potentially bleed over here into the United States to an extent that a lot of people aren't necessarily prepared to experience. So I'm keeping a very close eye on this. I don't think it's an immediate problem, but it's one of those things that you want to keep on the radar as you're building your passive income portfolios, as you're building your dividend income passive portfolios. You got to realize some of these external factors that could affect some of the holdings in your portfolio, especially, if you're carrying any kind of real estate holdings, because, a lot of the dividends come from the real estate sector, especially from your REITs inside of your diversified portfolio. More than likely you're carrying some REITs. I've got Realty Income Corp, Simon Property Group. I've got Welltower, LTC Properties, Store Capital, and Rhythm Capital Corporations. And if you're carrying a REIT, you need to be aware of where your REITs are investing. So if you've got some REITs that may be invested in China, they may actually be affected more so by the China Evergrande pending potential economic collapse going on. And again, this is an evolving story, but I just wanted to kind of share this information with you guys. I wish everyone the very best. Stay motivated. Don't let anyone tell you you cannot do what you're trying to do. You can build passive income. You can reach financial freedom. You can reach FIRE. You guys stay motivated. I'll drop a link in the description down below of this video if you'd like to see all the holdings in my portfolio. And I'll see you guys on the next one. Take care.